On Wednesday, the Federal Reserve gave Wall Street a nice Christmas gift, namely its dovish rhetoric. As a result, the benchmark stock indexes developed a steady rally and gained more than 1.3%. The Dow Jones reached the record high closing level since January 2022, and today the stock market moderated euphoria, but it's still enjoying the pleasant aftertaste following the Fed's meeting. Analysts predict that the major stock indexes might close the year at a historic highs. As expected, the Federal Reserve kept the funds rate unchanged, and the Fed's chairman, Jerome Powell, stated that unprecedented monetary tightening could have come to an end because inflation had been declining faster than anticipated. So the issue of monetary easing has been already on the table. Such rhetoric pushed the blue chip index to the first record high in just 2 hours. It means that the Dow Jones has been in the uptrend since its slump of the most than 20% in September 2022. The S&P has surged 22.6% since the beginning of the year, and the index rose by 0.137% yesterday, closing at 4,707 points. Wall Street indexes retained optimism in the New York pre-market. Futures on the stock indexes grew by 0.2 and 0.3% before the opening bell, and the market is poised to enjoy the festive mood and challenge the bulls. The S&P 500 is expected to trade in the intraday corridor between 4,700 and 4,745 points. The pessimistic forecast suggests a decline to 4,680 and the optimistic one a climb to 4,770. In the policy statement, the US Fed kept the status quo. Besides, 17 from 19 Fed policymakers predicted that by the end of 2024, the funds rate would be lower than now, and the median forecast indicates that interest rates would decrease to 4.6% from the current 4.5%. US stocks rallied in the light of Jerome Powell's words that the central bank would unlikely raise interest rates higher, and the regulator is very focused on not making the mistake of keeping rates too high for too long. And this message tells us that markets have already priced in imminent rate cuts and that they have dispelled recession fears. Since March 2022, the Federal Reserve has increased the funds rate by 535 basis points with the aim of attaining high inflation. In this context, all sectors on the S&P 500 closed with gains, and the property and utility sectors sensitive to interest rates jumped by more than 3%, leading the rally. Futures on the stock indexes extended their growth today, and fresh macroeconomic data did not influence market sentiment. Reports mirrored steady consumption and the lower than expected increase in unemployment claims. Retail sales in the United States unexpectedly grew by 0.3%, having rebounded after a 0.2% drop in October. The growth defied the forecast of a 0.1% downtick, and the figure proves a robust start of a Christmas shopping with the biggest increases coming from food and beverage outlets, retail outlets, health and personal care stores, and furniture stores. Sales at the gas stations, retail stores, electronics and household appliances stores, and building materials went down. Excluding volatile components of automobiles, retail sales increased by 0.4%. Weekly jobless claims dropped again from 19,000 from 221,000 to 202,000, falling short of market expectations that had been seen claims fall by just 1,000. And the data had a little impact on market sentiment. Treasury yields fell to multi-month lows following Wednesday's events, The yield on the benchmark 10-year Treasuries closed at 3.9805%. Seasonal factors could be tailwind as December is the third best month for the S&P since 1915. The second half of the month is commonly stronger than the first. In corporate news, Dow shares fell by 4.5%. After the Photoshop maker forecast full year and quarterly revenue below estimates. Moderna shares leapt by 6.1% on a good news about an experimental cancer vaccine, and Occidental Petroleum added 2% after Warren Buffett's Berkshire Hathaway bought nearly 10.5 million shares of the oil giant. In the currency market, the US dollar is extending its weakness, having collapsed to multi-month lows. The greenback is hitting rock bottom, coming under pressure from the euro and the pound sterling today. The US dollar index traded at 102.30 points, or 0.5% down, before the opening bell. And the baseline outlook for the index is an intraday corridor between 102.10 and 102.60 points. The pessimistic forecast predicts a retest of 101.70. Today, the US dollar plunged to a new 4-month low after the Federal Reserve signaled the end of its rate hikes and sent a message about the pending rate cuts during 2024. The pound sterling advanced by 0.7% against the greenback after the Bank of England voted 6 against 3 for keeping the key interest rate at 5.25%. Meg Green, Jonathan Haskell, and Catherine Mann preferred to raise the bank rate by 0.25%. Unlike the Fed, the committee said interest rates should remain high for an extended period. The ECB left rates unchanged, but the market has yet to digest the accompanying announcements. So far, the single European currency has grown by 0.6% against the US dollar, and the Canadian dollar is benefiting from the US dollar slump. Though the Bank of Canada has already held a policy meeting, the loonie finds extra support from a recovery in oil prices, and the USD CAD pair is trading now at 1.3430. The intraday corridor for the instrument is determined between 1.3380 and 1.3450. The crypto market is trading without a common trajectory. Popular cryptocurrency are trading mixed. Bitcoin is drifting down quietly, and the token opened the New York session at $42,550. The crypto market also developed a steady rally alongside risky assets. However, today top altcoins pulled back from their peaks reached yesterday. The crypto market certainly welcomes monetary policy by the Federal Reserve, but it's anticipating from another regulator, the Securities and Exchange Commission. Meanwhile, our analysts predict the following intraday corridor for the Bitcoin from 41,900 to $42,800. If any of the borders is passed, the price could drop to 41,400. Otherwise, the bulls might push the price up to $43,200. Our review of the US markets is over. Ask any questions in your comments. Our analysts are open for your feedback. Share your viewpoints and subscribe to InstaForex TV channel. And see you online tomorrow.